Hello and welcome to this fund manager interview. My name is Micah Curry and today I'm joined by Alex Wright. Alex, thanks for joining us today.
Thank you.
Today we're talking about the Fidelity Special Values Investment Trust and we're talking about the Fidelity Special Situations Open-Ended Fund. Now I wonder if you can start by talking us through the differences between those two funds.
So the key difference is the fact that Special Values is an investment trust or a closed-end fund. So we don't get cash flows into that fund like we do in special situations. And that allows me to invest in some slightly more illiquid stocks. So there is a slight difference in the portfolio. So about an 80% overlap, the same style between the two funds, but a slight difference in holding, taking advantage of the fact that the fund is closed-ended.
But the investment process and investment philosophy is the same across both funds. I wonder if you can explain what that is to our viewers.
Yeah, so that's correct. It's very much the same value contrarian philosophy across both funds. So what does that mean? So basically, I'm looking for things where I think the market has got something wrong. So stocks generally that have been poor performers, but where I think there's a potential for a turnaround going forward and the market being more excited about a company in the future than they are today.
Now the thing I notice is among your top 10 holdings, you've got quite a large exposure to banks. Why is that?
Yeah, so banks is an area of the market that's one of the most exciting, I think, today. And indeed, HSBC and Citigroup are in my top 5. And then I also own some Lloyds, Barclays and Bank of Ireland. So quite a spread of banks holdings. And I think that's because of the valuations you see in that sector. So
they're quite cheap at the moment.
Yeah, it's still an unpopular sector with other investors. But the banks are increasingly seeing profits going up. You're seeing recoveries from the recession and much stronger balance sheets now. And I also think some of the regulatory risks that other investors are still worried about, while they are still there, those are much more known and manageable now than they have been historically.
Now, by definition, your investment philosophy is such that you hold unloved sectors, but you don't hold all unloved sectors. For example, you've got no exposure to supermarkets, which at the moment is this area that's struggling. Why is that?
Yeah, you're right. So supermarkets have been a sector that have been performing extremely poorly over the last couple of years, and the funds have benefited by not owning any of those UK quoted stocks. The reason I'm not interested in this sector, despite the underperformance and the lower valuations now, is that balance sheets are still very weak. So there's a lot of lease liabilities there and also debt on balance sheets. And then also I like to see supply exiting an industry, and so that's a sign that I think returns are going to improve, profits are going to get better when competitors close capacity or exit. And unfortunately in UK supermarkets, while you're not seeing the big supermarkets open space anymore, and indeed some closures, the problem is there's still new shops being added primarily by the discounters, so Aldi and Lidl, also Waitrose, Asda, and then importantly also online is adding virtual space. So the problem is we're looking for a return to profit growth, so the market's hoping profits will increase, which I think is very difficult as supply continues to come into the industry.
Now let's talk about stocks that you do hold, and you've bought a few names within the oil sector. Talk me through that.
So oil's clearly an area that there's been a lot of news flow around after the oil price sort of halved in the second half of last year, and that is a very big move in that market. And post that and the strong underperformance of a number of stocks in the oil sector, I've been doing a lot of work there and have started to buy selectively some names, so a few small cap names, and then also importantly increase my position in Shell quite substantially by buying BG after the bid there, because I think that is an extremely good deal for Shell shareholders going forward, because it adds in substantial production growth over a multi-decade view from the Brazilian assets primarily, but also twins that with a very strong balance sheet in the combined group, and that can pay a very high dividend yield, so yielding over 6% today, which I think is very attractive.
Now we've spoken about quite a few stocks. Let's talk about your general outlook going forward. There was some nervousness in the UK market ahead of the general election. Has that now disappeared? What's your general view?
So the UK market has done well this year, and especially post the general election. But I do think when you look at valuations, however, that the market has done well for a number of years, and valuations are only fair, I would say, today. So I think overall, but potentially a more muted market outlook. But what I concern myself with is looking at stock specifics. Are the individual stocks undervalued is there potential in those names rather than worrying too much about the overall market outlook.
Now, given the market has had such a strong run, as you mentioned, are you turning a bit more defensive within your portfolio? Are you looking towards larger cap companies?
So I think after the very strong run we've seen in small caps over the last 6 months or so, some larger cap companies are becoming at the margin more interesting, and I have been adding some of those. So we talked about Shell. I've also bought CRH, was a big construction company, added to my Carnival position, and also started to buy into BT. I think a big change is likely to happen there with their purchase of EE. So I think some of these larger companies have become a bit more attractive recently because some of the focus has been a bit more down the market cap spectrum, particularly post-election.
Alex, thanks so much for those views on the 2 funds you manage.
Thank you.
And thank you for watching. If you'd like to find out more about these funds, visit the funds page on this website.